Well, inflation doesn't help because it's taking money from your pocketbook and not allowing you to allocate money into crypto because it's a retail driven market. It also creates a lack of liquidity because the Federal Reserve, to stop the inflation, have been taking liquidity out of the system. So that means institutions and hedge funds have less liquidity to put into the system and therefore less flows into risk assets like crypto. I found the best approximation to be money supply growth, M2, year on year. And year on year M2 looks like it's potentially turning up global M2. We're already seeing that China is going to start picking up M2. We're already seeing that Europe is going to start stimulating through the back door, which is they're going to have to offset the electricity prices, the difference between electricity and gas prices. And they're also giving direct transfer payments to people to pay their electricity bills. So I think that monetary policy changes. It also lags ISM. It's kind of a weird thing. And it tells me that M2 bottoms right about now, which is what the crypto markets, I think, have been telling us. They're trying to find this bottoming process. And if I'm right, the economy slows down, liquidity is going to come up, and crypto is going to rally from here. Let's see. But again, I think crypto is put in a low. I think the ETH merge is a very big deal.
Yeah.
I think it's going to drive inflows. Yes, there'll be volatility. Yes, it won't be a straight line. But I think over time, it's going to put some security into the space because it's done and out of the way. Let's see. Let's hope there's no risk around this. It'll die some of the FUD narratives that are currently building as we move into this, which is only normal and people should question it. And then we'll see on the other side, when you've got this yielding asset that is a giant in the space, what that unlocks in terms of DeFi, the opportunities for institutions to invest, and other opportunities that come from a different asset. Also, the ESG credentials. We all know that Bitcoin ESG credentials are not what the ECB or others will tell you, but that's the narrative that's won the institutions now, that Bitcoin bad, but proof of stake, good. So I think all at the margin, it helps people allocate. The amount of money is growing. Well, there's money everywhere. We can do stuff. Now, it means that it's easier to borrow money from your bank. It's easier to get a mortgage. It's easier to do all sorts of other things. But it also means that businesses have easier access to capital. Banks are not hoarding capital as much. So it means that money flows throughout the financial system. We're a system based on leverage and liquidity. So when money supply is shrinking around the world at the same time, it means that it's going to pull down all assets. And in fact, when we look at it, the bond market has lost $19 trillion in value globally. The equity market's lost $21 trillion in value. Let alone, real estate, crypto, all of these things. We've lost something like 40% of global GDP in this pullback. I mean, that's a lot of wealth that's been destroyed. And that's without interest rates getting very far. I mean, the US interest rates are 2.5% and bond yields are at 3%. But that's the problem of a leveraged market. So when you take liquidity away from a leveraged market, if you're paying the interest on your loans and you're not got enough money, so imagine you're trying to pay your mortgage, but your salary keeps going up and down. So i.e. the amount of money you've got is suddenly less, which is what's happening with inflation. It's harder to pay your mortgage. So you won't borrow or spend as much money. That's what liquidity does. So it's M2 is liquidity. Liquidity going up is good for assets. Liquidity going down is bad for assets. Liquidity negative, where it is now, has been particularly bad for assets, which is why we've had a bear market and we're pricing in a recession. Currency should not go parabolic, especially the largest currency in the world. It's a bad thing. And, I'm guessing that this is going to become a talking point for G7 nations, is like enough is enough. It's a big problem. Considering, for example, Europe imports oil, Japan imports oil, India imports oil, China imports oil. Oil is priced in dollars. And so they earn local currency and need to pay dollars, it's harder and harder to pay for. So it's bad.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.